In this PPT, actually, I have we have 32 PPTs. So apart from the height, this is not a 2-hour topic. It's hardly 1.5 hours only. But because of the Q&A and how much I can prolong the slides, I've made it to a 2-hour topic. But considering the importance of this particular topic and the need of the hour, I think this is a very, very pivotal topic to be discussed. So I have just 33 slides here, and first around 10 slides, 6 to 7 slides if I show, maybe you might feel it's like very, very basic. But trust me, this has a relevance in the slides which I'm going to explain. So before I just start, I just want to give a small synopsis with a story. If you permit, I can. Yes? Okay, so there is this one story in Mahabharata, and usually in Mahabharata, there is a common notion that Arjuna was a pet student of Dronacharya. He was a pet student. So, and there is one reason behind it. So, I am going to relate this story to this particular topic also. So, in that, you might be wondering, like the previous olden times, the school, it was a Gurukula type of education where it was like very free. You can see the greenery and surroundings and then take the classes, interact with nature and everything, apart from what is happening here now. Now, one day, all the Kauravas and the Pandavas were sitting, and and Dronacharya, the guru, has asked. He actually put a wooden parrot on the particular tree and asked all the students, like they have to shoot the eyes of that particular wooden parrot, and whoever does that first, he'll be considered as a winner. Now, after he said this, he asked each and every one of his disciples what they see. So it came to Kauravas and the other Pandavas, other than Arjuna, and each one had their own view. Say some said, I see the trees, some said, I see the leaf, I see the fruit, I see children playing, I see the saints who's going to perform puja, the ladies plucking flowers, everything. And finally, the turn came to Arjuna. So he asked the same question, hey Arjuna, what is that you see in the tree? He said, I can see the darkness in the eyes of the bird. And the moment he said that, he was given the chance to shoot. The moment he was given the chance to shoot, he first, when we say it's a bullseye, we say it's a bullseye. Exactly into the eyes of the bird, the arrow went. So here, if you see, each and every one in that particular group was telling or iterating whatever activity was going on in that particular place. It is nothing but an audit trial. It is nothing but it's an audit trial. They are actually giving a description of what is happening there. Before actually coming to the end point, they are giving a description. But like our Companies Act also, they used to take a log of whatever is happening except for the very vital point of this particular audit log or the edit log feature. So what Arjuna said, the darkness in the eyes, is exactly the point that MCA has recommended now. It is nothing but the edit log. It has to be something that should have been implemented previously. But I think I don't know what took them so far to come and implement this feature now. So saying this, I'll just start with it. First, I have few definitions that is taken from Companies Act. The first is with respect to books of accounts. Then we have another one definition called as book and paper or book or paper. And we have maintenance of books. So normally, what is the books of accounts referred to as? So whenever someone asks us what is the books of accounts, we refer to as P&L or balance sheet. So as per Companies Act, whatever is the amount that we spend, whatever is the amount that we receive, or say, for example, whatever is the asset or liabilities, whatever is the income, whatever is the loss, everything will be coming under the term of books and accounts. Now here, if you see, certain companies which are subjected to cost audit as recommended by the government, they have an additional obligation of maintaining the cost records also. So even this comes under the wide term of books of accounts. So books of accounts is basically nothing but whatever amount you spend, whatever amount you receive, the total sales, the purchases, the liabilities, the assets, and cost records. Now, this definition is pretty much common and we have already studied in our inter and final times. And practice, we hardly use this definition. Now, this definition has a huge relevance when it comes to audit trial. Can anyone say what is the relevance or maybe give a try? In audit trial, they have come up with a definition, what to be captured, but they haven't given the definition of what is books of accounts, what constitute books of accounts. Say we are maintaining the fixed asset ledger in a particular Excel sheet or a spreadsheet, the fixed asset account, or maybe the payroll in a separate Excel. Does that constitute books of accounts? As per this definition, it doesn't fit anywhere here. But does it have a financial implication? Yes, it has a financial implication. We bring the fixed assets into the balance sheet. We bring the payroll expenses also in the P&L. So can I or should I include audit trial in those elements also? In a spreadsheet level or in a separate element, a separate software or separate say Zoho books or whatever it is, where I maintain the fixed asset or payroll or. So here for this particular reason, I have included this books of accounts definition. Now I also have something else called as a book and paper. Now, another one query that might come is, say in our audit, we have SA 230, which deals with audit documentation. So we have something called as a working paper. Working paper is basically whatever audit procedures we perform, whatever audit evidence we find out, and whatever audit conclusions we reach out, all this will be documented in the form of a working paper. Now, in this working paper also, we have two types of working paper, if you see. There are two types. One will be for a record purpose. Till now, whatever records we have got, we'll maintain. One will be those currently used for that particular audit. Say, for example, the current year transaction, the current year MOMs, the current deed signed for that particular year, which is relevant for that particular year of audit. So here,
1434 current. 1434.
So here also, similarly, there is a definition called as book and paper or book or paper, which includes not just the elements which are mentioned in books of accounts, but other elements like your minutes, your documents, your vouchers, your deeds, anything that actually we don't consider as a part of accounts. Those are also included in the definition of book and paper, and this is also as per Companies Act. Now, when I tell about books of accounts or books of paper, the next query that comes in your mind is, where should I maintain the accounts? So normally we have a thought like it has to be maintained at the registered office. But now we know it can be maintained anywhere. It need not be only at the registered office, provided it is known to the ROC within 7 days with the relevant address where the particular books of accounts are placed. So this also has another relevance where the books has to be maintained. Now, as per the new audit trial provision that is coming into picture, we have a small implication with respect to maintenance of books. Say, for example, I have some holding company, or maybe say I have some subsidiaries, or I have a global presence, and I maintain the accounts outside India. Is that permitted? I maintain the accounts outside India. It is not maintained in India. I maintain it outside India. Is that permissible? What is your input into that? It can be. Any other? It can be, or it can be. Except the mandatory. Okay, fine. So I have a point on this particular aspect also in the coming slide. So before that, I just want to make you understand where the particular books have to be maintained. So as I said, it has to be maintained in the registered office, but it is not mandatory that it has to be maintained only at the registered office. It can be maintained at any branch in India, provided the address and the exact location of that particular place is known to the register within 7 days of change. This, and as per we know, it has to be kept on an accrual basis on a double entry system of accounting. Now, there is a retention period. So this is a very important element, especially for auditors. Yes, especially to prove that we are not negligent. We have done the particular audit perfectly, or we have enough evidence that we procure during the course of audit. This is a major area that we need to keep in mind. That's a retention period. So even for audit documentation, we have a retention period for how long we have to keep the document. So here also, books of account has to be kept for 8 years, for a period of 8 years. Now, each and every definition I have discussed here, trust me, it has a relevance with the audit trial. Some way or the other, it is connected to audit trial. Now, there is one definition called as accounting software. Now, is there any relevance or any definition given in the Companies Act with respect to accounting software? Software itself is new for CAs. Companies Act doesn't have the term itself software. It is not there. But what is an accounting software? It's a book of account or any software or application that helps a particular entity in maintaining the books of accounts. It could be sale or purchase or recording, anything. It could be even from a small spreadsheet to a big, huge ERP like SAP. It could be anything. So normally for firms, we usually rely on Tally or Soho books. But when it comes to very large entities, we go for bigger ERPs like SAP. And the implementation time, as we know, also is very quite high. It varies from like 1 to 4 years, depending on the kind of modules you put in. So here also the retention period is very much marked. And if you see, there is an accounting software definition that is given here, but this is not as per Companies Act. A generic definition of what an accounting software is: any application or any software which is helping the particular entity to maintain the day-to-day transactions, financial transaction. Now, here it could be your fixed asset, it could be your receivables, your payables, or your payroll, anything. They haven't mentioned or they haven't given a limit. Whatever financial transaction is coming, it helps to maintain it. Now, there is another definition. We are slowly evolving into the topic, which is called as an audit trail. Now, why is this audit trail important? Already a software, whatever you give, say the specialty of a software element is what garbage in, garbage out conceptually. Whatever you give, it processes. It doesn't have any particular logic. It could be the errors could be in two different ways. Either you're giving a wrong input or there will be a wrong processing happening. Either whatever you're entering is wrong, there could be a wrong output, or sometimes you're entering it rightly, but the processing inside is wrong, then also it can give a wrong output. Now, here comes the concept of audit trail. So basically, we want to keep a record of whatever it is happening during the audit. I want to know from the beginning, from the source document, from the vouchers and invoices, the time I go and post make a journal entry, I post a particular ledger balance, and then I go to the trial balance, P&L, balance sheet. Each and every point, I want to trace back a particular transaction. Say, for example, this is the best thing. For example, I am giving something to my articles. This feature is enabled. I can know where she and which point she makes a mistake, or which, even if she misses to account something also, I can easily find out. So this is basically keeping a track. So here, basically what I do is a step-by-step recording of the financial transaction. Now, why is this important for auditors? Why is this important for auditors? Fraud detection could be one. Any manipulation in the accounts made by anyone, finally, it comes as we didn't do the audit properly. So if we have a track of this particular audit trail, we can find out at what point of time who made the change and why the change was made. So it is actually a self-defense mechanism for auditors. It's a self-defense mechanism for auditors. But trust me, this topic has to evolve. This is only a basic element that was provided by MCA, but sure, we have a lot of practical difficulties and implications in this particular topic, and it needs to evolve with time. So for this particular point, we'll understand what an audit trail is. Basically, each and every step of the transaction, I will be able to trace that. Now, what is included in an audit trail? Now, audit trail, it has to provide some basic information. Say, if I want to find out what has gone wrong, I need to find out who has made the change. Say, for example, the accountant or the audit executive or even the CFO, if they have made a change, I should be able to understand who has made the change. So practically, it should include the user activity. Who has done what? Now, access to the data. Say, for example, we have this concept of a role-based access. I am not sure how many of you have heard of this. Role-based access in ERP. Yes. So role-based access is giving access only to such an extent for what you need to know and for what is required for your job. Say, for example, we have 3 sets of people: an accountant, an analyst, and a CFO. Accountant, basically, he posts the entries, makes some corrections or deletions or whatever it is, it will be done by the accountant. Now, an analyst's job is not to put an entry. He basically analyzes the financials. He makes a comparison. He makes the analytical review. He doesn't actually go and play with the data. If you go to a CFO level, he doesn't need any of these. He only wants a summarized report from where he wants to understand what is the total profit or liabilities or asset and how the company is positioned. So these three people have three different functionalities. So I need not give all the three the same kind of access. I need not give a right access to an accountant. I need not give a right access to an analyst, and I need not give a right access to a CFO. I can give a right access or maybe a read-write access to an accountant, a read-only access to an analyst because he has nothing to do with the accounts, only analyze that, and a print and read access to a CFO. Even he need not go and manipulate the accounts. He might take a printout and then his job starts from there. So here we have three different access: read-write access, read-only access, and a read and print access. Now this access I am giving based on the respective job roles that is allocated to the person. Similarly, here also I need to check who is accessing the data, whether it is the accountant or if it is a senior management, whether he needs to access the data, I need to see. So here audit trail should also include user activity, also access to the data, who has access to the data. Then login attempts. Why is login attempt important? Say passwords we might be having. Sometimes maybe I just take a very bad example, but still.
It happens.
It happens. Say, for example, the husband or wife, they want to understand the other person's password. They try different combinations. So all these will be unsuccessful attempts. Yes. Say 10 attempts, 11 attempts, 12 attempts, it will be unsuccessful. And finally, at one point of time, they may be successful in cracking the password also. So these unsuccessful attempts actually show a person who is not required to see or read or access that particular data is trying and accessing. So we also have a login attempt capture also. We also need to capture the login attempt. Who is logging in, what point of time, how many unsuccessful attempts it is, all those data will be captured. Then administrator activities. Say everyone is given access as per their rule. But there is a super user. There will be a super user. That means he will be having a read, write, print, all access he will be having. But if that particular person is misusing his access and making change at the back end, then also it is equivalent to giving equal access to everyone. So we also have to see whether this particular administrator is also making right use of his particular access. So administrator activities also need to be captured in an audit trail. And finally, automated system activities. Say, for example, exception. Say, whenever a person is attempting to access a particular application more than 5 times, it should show an exception or it should show an error that this particular person has violated or person is trying to, or whenever a password has expired, it should show an error like it is time to change the password, or maybe it should direct you to the IT admin person who can change the password. So all this should be captured in an audit trail. Now, why is this audit trail for? Basically for reducing the errors and unauthorized access, whatever I have mentioned, fraudulent activities and all. Now comes our actual topic for the day, which is the proviso that was given by MCA. So now on the happy side, this particular clause was deferred twice. This is the third time Companies Act is coming with a particular clause, and hopefully this will be implemented. They have said it will be implemented, but actually it came on March 24, 2021. Twice it was deferred. 21 it came into effect, but no, it was not accepted. 22 also they said again it was not accepted, and 23 they have made it mandatory. Now we have two different rules here. One is with respect to companies audit and auditors rules, and the other is companies account rules. Now both of them almost share a similar kind of provisions with respect to audit trail. So what does this particular audit trail say? They say any company that is commencing on or after 1st April 2022, which uses an accounting software for maintaining the books of accounts, should have these features. Now, the first line itself is confusing. Can anyone say why? The first line itself is confusing. Say I am maintaining the books manually. Should I go and implement this feature? Physical, it is there. I am doing it physically. I'm maintaining it manually. I'm not maintaining any accounting software. So they have mentioned only accounting software. So should I go and implement this audit trail feature?
Yes.
Yes, manually also. But actually law is quite silent. They haven't mentioned anything about the manual aspect. Already it is there, but say for example, somebody is able to remove. Say for example, they have the vouchers or bills. Say if it is in a system, automated environment, everything will be in the system, and with the access, you'll be able to understand who is removing or who is deleting, say who is making an entry or deleting entry, everything. Now, in the manual system, it is not as easy to track. But say for example, the source documents can be changed. Source documents can be manipulated. So that level of check won't be there in the manual systems.
Maybe in the software, they mean to say that there must be audit.
Yes, but actually, they could have added one more point, sir. Edit log feature. That's what they meant, but our people started interpreting that. Then I just like edit log, but it is not only the edit log. That is the difference. One place they are telling us edit log. In another place they are telling all the transaction process. It is a logbook, but logbook basically denotes the changes made. Say when I am making a new entry, it won't be coming in the logbook. Only if I am going and changing that entry, it will be coming in the logbook. But
system also there is one logbook.
Yes.
Automatically it captures.
It captures. In Tally, I have just put the demonstration, sir, like how entry is created when it is deleted, how it appears. So that's a beautiful way how the versioning happens. So that is also included here. So here, basically, the first line itself, they're mentioning about accounting software, and that particular accounting software should have the feature of recording the audit trail or the edit log facility. And I mentioned what is an audit trail. It is basically a record of all the events that is happening from the beginning till the end, finalization. Whatever happens, you are basically recording all the events. Now, they have also further coming up with another clause like it has been operated throughout the year for all the transactions recorded. So at any point of time, if I am disabling it, it is again a violation of this particular provision. Say for example, part of the month, I by mistake, I have disabled that audit log feature. Then also it will constitute a non-compliance. So here what they are meaning is from the beginning till the end of the particular financial year, your audit trail feature has to be enabled. So it is always better to go with the auto-enabled one, so that nobody else will take a chance of disabling it in between. And the third is you have to also ensure that this particular feature has not been tampered with. That is more important. See, in this, if you see the previous two slides, I told about administrator activities. So tampering need not happen only at the level with the accountant or the CFO. It can even happen at the back end. So that also has to be taken care. Audit trail feature has not been tampered. And finally, it is preserved as per the statutory requirement. So that is the reason why I mentioned what is the statutory requirement for the books. It is 8 years. So whenever you are maintaining the books of accounts for 8 years, it is also mandatory that the audit trail also has to be maintained for a 8-year period. So here, first challenge with the companies will be identifying what constitutes books of accounts. Whatever I maintain in the spreadsheets, if it has a financial implication, it is also coming under books of accounts. Say some deeds or vouchers, if it has a financial implication, that will also come part because it comes in the definition of book or vouchers, books or notes, the second definition which I do. Then if you say it has to be operated throughout the year, should not be tampered with, and the statutory requirement. This is as per the audit and auditors rules. Now, if you see the company accounts rules, here, this is basically the one that came into effect from this particular year, that is 1st of April 2023. So every company that uses an accounting software for maintaining its books has to record the audit trail. Now, if you see, the wording is different. The previous one, it was a edit log. If you see here, It is each and every transaction. That means even if you enter a transaction, an audit trail has to be created for that. A version has to be created for that. It is not only the change. Any addition, deletion, change, alteration, everything has to be captured. Each and every transaction, the audit trail has to be maintained. Then again, they are reiterating like creating an edit log of each change made in the books of accounts and the date. So it is basically what I showed as what an audit trail will maintain. Who made the change, when the change has been made, and who all has the access and the administrator. All these things has to be captured. And finally, it should not be disabled. So that means it should be operated throughout the year. So this actually came into effect from April 1st, 2023. If you see for auditors, this became mandatory from 1st April 2022. Auditors, it became mandatory to report on this particular audit trail feature from 1st April 22. But the feature itself got implemented in 1st April 23. That means we can be silent or we need not report for the previous financial year. Previous financial year, we can be silent on this particular audit trail feature. So because only auditors were mandated, whereas the feature itself came into effect on 1st April 2023 for the entities. So this is a small synopsis of this particular audit trail. Basically, a record of all the transaction has to be maintained. It should be operated throughout the year. No tampering is possible. Any change, deletion, basically an edit log has to be there. The record has to be preserved as per the record preserving criteria, that is 8 years. And also you should not disable the audit trail facility in between. So this is the basic crux of this particular rule. Now, if you see, I mentioned about the global presence of the companies. For companies which is situated outside India, say if you have branches outside India, for that, where you can maintain the books. Normally, we thought like we can maintain the books any place, say even outside India or within India. That is immaterial. But now they have clearly come up with this particular rule that if you are maintaining the books outside India, a daily backup has to be maintained in the Indian server as well. Say if you have a global presence, you have some companies incorporated outside India, you have subsidiaries or holding outside India. It clearly shows or tells that you need to take a daily backup of those accounts maintained outside India. Say, for example, it may be in a server outside India, then daily backup has to be kept in India. Now, they are making things a little more difficult and complicated. So, this is another addition that came up with this particular audit trail feature. So, basically, we didn't have this restriction on where to maintain the accounts. Now, they have clearly come up with this, like it has to be maintained physically in India. But within India, you can maintain it anywhere, provided you intimate the ROC. That is a different case. But it has to be maintained in India, or at least the daily backup should be there in India. So this is a small variation to the clause. Now, if you see what responsibility it is putting in auditors. Now, before I discuss, is it an enabler for auditors or it is an additional reporting requirement for auditors? It's an enabler. Any other opinions?
So based on article, you can form the opinion that everything has been tampered up. Reliance on the accounts.
Actually, it's a yes, it's basically a safeguard for the auditors. Like if you, it's an additional reporting responsibility. I agree, but we have to accept because we have. It's a better to protect ourselves. I think enabling thing only. Now, the challenge here is to convince the management to implement this part. So, normally to get the books done itself, it is a huge challenge. Now, in addition to that, we have to make them understand the need for this particular audit trail feature. So, at least as per my understanding, 60 to 70% of the companies will not comply with this feature this year. First of all, they won't be aware. Even if the auditors or any of the persons who are like regulators or connected with them also tell it will take some time for them to come in tune with this and accept this, for them to implement this. So initial 1 or 2 years will be a testing phase only. Though they have come up with this provision, it will be a testing phase only. I don't think 100% of the companies will comply with. It will be a non-compliance. And we'll have good things to report also. So the thing is, it is an enabler for auditors, but it takes some time for the management to understand and implement this. But no doubt, it is an additional responsibility for auditors. Now, when I say additional responsibilities, is it as per Caro? Is it as per Caro?
Yes.
Yes. Any other views? Now, Caro, we have applicability, sir. Like it is not applicable to banking, insurance, Section 8 companies. We have a list where Caro is not applicable. Now, is there anything for audit trail like that? Audit trail is not applicable to Section 8 companies or foreign companies. Is it mentioned anywhere that it's not applicable to any type of companies? There is no exception. It is applicable to all companies. That means it doesn't fall under Caro. Caro is applicable only to a set of companies, but this is applicable to all companies. That means it is not coming under Caro, but it is an additional responsibility. That's why they have mentioned clearly. It is an additional responsibility. It is not reporting as per Caro. Caro have a set of things to report. In addition to that, you have to report under this also. It is not as per the Caro requirement. It is an additional reporting responsibility. Now, if you see, now these slides, if you see, sometimes we may get a mini heart attack, like, okay, auditors, blue responsibility, you have so many responsibilities for auditors. Yes, it's indeed an additional responsibility, but management also has an equal part to play. If you see, what is the responsibility of the management? Now, whatever points I've discussed, again, in a different way, it has been reworded, if you could read. Basically, identifying what constitutes books of accounts. As I told you, this is the first challenge that they are going to face. Sometimes they may implement in the particular ERP system they are maintaining the books of accounts. Say it could be SAP or Tally or Zoho, whatever it is. But other elements like, say, for example, a spreadsheet are very simple tools where they could maintain the payroll accounting. So these places, they may not maintain an audit trail. Now that constitutes a violation. They have to maintain this audit trail feature even in those books or those elements. It need not be only in the accounting software because that has a financial meaning. First is to identify what constitutes your books of accounts. Second is what software I should use. So there are n number of softwares that is available in the market. Now, which accounting software I am using? Now, that particular accounting software, whether it has an audit trail feature. That is a third requirement I have to check. So I have to use an accounting software. I have to check whether the audit trail feature is there. And also I have to check one more level, whether it is always enabled or not. Say why I mentioned this, Tally has a feature of enabling and disabling this particular audit trail feature. Actually, it is a risky option. If someone else disables also, you will be in trouble. So it should be always enabled throughout the year. And whatever changes that is made in a transaction, changes I mean, even an entry, a deletion or any change or any addition made to that particular transaction also need to be captured. So it covers our end-to-end, starting from identification of what constitutes books of accounts, what software to use, whether the software has an audit trail feature, whether it is being enabled throughout the year, and whether it is able to capture all the transactions. Further, protection of audit trail from modification. So this is the most important aspect. Say, I don't know whether you have seen this. Most of the shops, they will have the CCTV surveillance. So I think all the vital points, they will be putting this high quality CCTV surveillance. So in internal control, we normally fix the importance to three different aspects. That is the design, implementation and the maintenance part. So if you consider this particular example of a CCTV camera, design part, we go and buy a very high quality camera with night vision, real time view. You can view all the places from anywhere. So all these small aspects we look and we buy a new one with a good warranty, everything. That's a design part. Implementation part, you put them at the pivotal points where you feel it can capture what is happening in that particular area. Say, for example, financial transaction or any activity that will be implemented in those areas. And third is the maintenance part and the monitoring part. A person has to be there to monitor it and say whether there is any lacunae in the working of that particular system. Say it is recording only for 5 hours, another 2 hours it is not recording. Again, it is as good as it is not installed. So all these three things we look: design, implementation, and maintenance part. Now, design part is good, implementation part is good. The last part, monitoring and maintenance. Vital points, good quality camera, but nobody is monitoring. Is it of any use? Is it as good as you don't keep a CCTV surveillance? So similarly, here also, you have an audit trial feature, it is enabled throughout the year, but you are not verifying that audit trial feature at the requisite point of time. Whether it is subjected to modification or anybody is playing around with it, nobody is moving. Then as good as you are not enabling an audit trial feature. So you have to check whether it is protected from any kind of modification. And then effectiveness of control. As I mentioned, who has control over this particular audit trial? Now here, two things you have to keep in mind. Regular users, whether they have access to audit trial and whether they are misusing. Second is the administrator or the super user who has access to the audit trial, whether he is misusing it. So effectiveness of controls also has to be checked. And finally, the 8-year criteria, how much you have to maintain that particular audit trail. So all this comes under your management responsibility. Now, auditor's responsibility is like more or less similar. Whatever they do or don't do, you have to report. If they do, fine. If they don't do, again, it comes as a part of your additional reporting responsibility. So here also we have to see whether the audit trial feature is enabled. It is enabled throughout the year. Now, audit trial is not tampered with. That means it is enabled at the database level. Backend level also it is enabled. That means if a super user is also making a change to the audit trail, that also has to be captured. So that level of audit trail enabledness is required. Then all transactions covered, 8 years also it has to be maintained. Then monitor changes to the configuration. Configuration, basically what I mean is who can access, who can change or make an alteration. Then management policies with respect to audit trial controls. So it is basically the review mechanism that we are talking here. So auditor's responsibility is again continued. The log is maintained for the required period. The testing is performed. Now, testing performed by the management. Say, for example, this is actually a management responsibility. Say, for example, inventory verification. If you go, there are two types in which we can do an inventory stock audit. Either you go and physically count it. Sometimes it is impossible for the auditor to do a physical count of the inventory. We do a process of observation. The management personnel will be counting and we will be observing the process, how it is happening, or reviewing the process. So here also we review how that particular audit trial completeness is tested by the management. So whether it is accurate and complete, all this on a sample basis. Here also it is not. So you might think like for a whole year, the audit trial itself will be like for one entry, if 10 versions are created, it is impossible for an auditor to verify everything. So as usual, we go for a sampling basis. It is not that end-to-end audit trial, we go for a sampling basis here also. What controls the management has put in place. Now, if you see, here we have SA 250 coming. What is this SA 250? SA 250. Considering the laws and regulations in the audit of a entity. What is the implication of law? Say, for example, in a balance sheet, we have a, say, for a particular entity has a good profit. This is a very common thing that debate thing. Say, for example, a company, a stable, consistent company, a good profit, good turnover. They are using child labor. They are using child labor. Now, as an auditor, should I comment on this or not? They are using child labor. The majority of the workforce is child labor. Under 14. It is a requirement we need to, though it doesn't have any financial implication. It is not affecting the financial, not affecting the balance sheet, but as an auditor, it is a statutory. And as per SA 250, I need to say that because it also affects the going concern of the entity in the long run. Maybe if the government comes to know there is a complaint given by the general public, tomorrow the government can even shut down the company as per this act. So it affects the going concern indirectly, and I have a duty to report as an auditor. So here also I have to check whether SA 250 is complied with. As per the laws and regulations, it is complied and it was enabled throughout the year. Now, the interesting part is, this is the most interesting part, for financial year 22-23, we are free. We need not report on this particular feature because this feature is coming into effect only from this particular financial year. Though for auditors, it was becoming mandatory from financial year 22. For companies, it has only started from this particular financial year. So for auditors, we can give this a sample reporting that I have given, like for auditors, how they can report for those particular areas of audit, right, which we need not report on for this particular year. So this is one area, it's like one happy happy slide, I can say. This one area we need not do anything this year. So next year it will be filled with comments. That's a different thing. But for this year, we are relieved. Now comes to the applicability part. So as I mentioned, for companies, this has commenced from this April 23. For auditors, it has already commenced from 22. So now a thought might come. It should be the ulta. First, it should be coming for the companies and then it should be coming for the auditors. But now it has come in a reverse way. It has come for the auditors first and then come for the companies. So hopefully this will sustain at least for some time unless they come up with new services. So this is the applicability part. Now, to whom it is applicable? Is it only applicable to private limited or public limited? Every company comes under the purview. Even foreign companies and Section 8 companies also are included. But if you ask me whether LLPs are included, no, LLPs are not included under this particular provision. LLPs and other proprietary concerns are excluded. Only Section 8, all the companies come, and for this particular reason only, it doesn't come under the CARO reporting. CARO has a specification to which companies it is applicable. So here, it is applicable for all the companies. Now, applicable for all the companies maintaining books in electronic form. Now, law is silent about those maintaining books in manual form. So that is the reason I told this particular topic will evolve with time. Now they will have lots of clauses attached to it in the coming days. How books has to be maintained, or whether books maintained manually, whether this particular clause has to be complied with, it has to evolve because there will be a lot of confusion regarding this particular point. Now, how to enable this edit log feature? Now, I think most of us will be using Tally. Yes, I think any other ERP being used here? So, QuickBooks, okay. So, anyone uses? So, basically it is Tally, right? So, Tally ERP 9, do we have this feature? It is not available in Tally ERP 9. It is only available in Tally Gold Prime. Tally Gold Prime has this feature, so you can actually configure these features in the existing Tally Gold Prime. Yes. So in that, either in the existing Tally version, you can configure these features, or we have another one particular edit log Prime. That's a separate installation altogether. You can directly go and install the Tally Prime edit log. Now, if you see what is the difference means, in the existing Tally Prime, if I am configuring these features in the existing Tally Prime, it can be enabled or disabled at any point of time. I can enable or disable. If I am going with the Tally Prime edit log version, it is always enabled. There is no option to disable it. There is no option to disable it. So, considering the risk, it is always better to go with the Tally edit log version because nobody can disable it at any point of time. Whereas this, you can enable or disable. There are a lot of tools in the market. I'm just taking the example of Tally. So whenever I'm taking the example of Tally, people used to ask whether you're representing Tally. No, I'm not representing Tally, but there are many. But this is the easiest one to take and the most relatable one because most of the firms are using Tally. So then we have Zoho books also, we have ELIXR books also. So these are also new in the market tools. So they also have this edit log feature, and they have a inbuilt GST accounting system also, more features compared to Tally, especially for GST practitioners and for auditors who have just started the practice. It is a complete package which gives. So these have an inbuilt audit trial feature, and for this also audit trial cannot be disabled. It is always enabled only. So that feature is over there. And then what feature is captured, what information is captured in the edit log. Now here, as I told you, version will be there. Activity, what changes that is being made will be there. The user ID, time and date will be there. Now I just have a small demonstration with respect to this. If you see, this is a Tally part. So now I am going and creating a particular account. I'm just creating a particular account. If you see, the moment I create, initially, if you can see, there is a version not available marked on the left-hand side. The moment I create, if you can see, there is a version 1 that has been created. That's a new entry that has been created here. Now, I'm going and making some changes in the entries. Now, people might have a thought like, once this audit trial feature is enabled, we will not be able to make any changes. We still will be able to make the changes. Only thing is, people will be able to track what changes we are making. So you cannot put so much of backdated entries in all the entries because it will be taken care of by someone else. So there is a restriction on that particular part, but that doesn't stop you from changing. You still can go ahead and change. Now, the moment you change, if you see a version, two different versions, I mean, this has got multiple rounds of change, that is version 5 and 6. So the moment you change, the change will be highlighted in a different color. If you see here, the red color represents what change that have been made. And here, if you see, the date has been changed from 15th to 16th, if you see on the version 6. So they have also highlighted the areas which have changed. So bill of lading has been entered here. So even if you make a new entry, a new version will be created. If you change the existing values also, a new version will be created. So basically it captures any change, any new entry, any deletion or creation, everything will be captured. Now you might ask me, when I delete a record, how it will be captured? When I delete a particular record, version 1 will be there, version 2 will not be there. That means already a version was created, now this version is not there because it has been deleted by the user. So even deletions are also captured. So additions, modifications, alterations, and even deletions are also captured. So this is basically the versioning that happens in Tally. I mean, for this particular purpose, I've taken only Tally here. Easy to accept. I mean, for you also to understand and relate, I think Tally will be an easier one compared to other ERPs. So all the three demonstrations, when a particular entry is created, when it gets altered, and finally when it gets deleted, how it will appear. And this is a very interesting part. If you see here, if you could see, the edit log is disabled, enabled and disabled, it is captured. Now the company, from the company per se, they are enabling the edit log, and it is always, they mean to keep it in an always enabled position. Say for example, at the back end, the super user, I told you, the administrator, he is going and changing the edit log or disabling the edit log. Will that be captured? That will also be captured. So I will also know who is disabling the edit log. So not only the change is made within the entries, but even if it is disabled, that will also be captured. So this is what I meant. Any changes made at the database level, that has to be captured. So this is also a demonstration of how it affects the log report. And finally, I think the last few elements is, what are the implementation challenges? Now it looks very easy. Okay, what is books of accounts? I have to enable this, I should not disable this, I have to keep this from, or I have to make sure that it is not getting tampered, all this I said, but lot of practical implications will be there, starting from understanding your books of accounts. Say they don't know where to implement audit trail, where not to, where all this comes under books, where I have to put an audit trail, or how I am going to, at the Excel level, how I am going to. But Excel level also we have the feature. If you see, so like we have this sheet also, you can lock a particular sheet, you can lock a particular folder, even in access, you can set access, who can access. Even password protection is also there at the spreadsheet level. So understanding what constitutes the first challenge, use of end user reporting tools. Now, sometimes compatibility issues might be there with respect to what kind of ERP you use, what it comes out. Even the spreadsheet, what I said also comes where it has to be implemented or not. Then global or common ERP maintained. Say, for example, you have a global presence outside India. You are maintaining a single ERP, which captures the accounts outside India as well as within India. Now, should I enable this audit trail for the companies incorporated outside India? It doesn't come into the purview. Only those companies which are incorporated within India, I need to maintain. So for companies outside India, whether I should, but I'm maintaining a single ERP. So single ERP, I cannot change that particular audit trail feature as per my whims and fancies. So I have to make sure whether it is maintained for our Indian accounts or it is coming for all the accounts. So that again will be a practical challenge. They have to deal with this. Then direct database changes, as I told you, at the admin level. If that is being made, again, that is a challenge. Sometimes this audit trail feature, sometimes we may subscribe to a cloud software as a service. So even now if you see the basic small example of a cloud would be the G Drive. Almost every one of us use a G Drive. See this audit trail feature or this particular accounting software also, sometimes we can go use a cloud platform, a software as a service. You can pay to that particular cloud service provider, use a service. Or say in big corporate giants, they may outsource this particular portion, say payroll computing or fixed asset management, they might outsource to a different company. Now, whether that company need to maintain an audit trail? Yes, that also has to maintain an audit trail. So, is it easy for us to go and monitor whether they are going and maintaining an audit trail? Ours itself, it is very difficult to control whether it is getting enabled or disabled. So, in that case, how do you expect us to go and see whether it is getting enabled or disabled? So, that is a more of a headache. I mean, luckily we are not into it. It's a management headache, but they have to deal with this. So, this outsourcing to a third party is a real headache when it comes to big corporates, because they have absolutely no control of whether they are tracking it or not. So there are a lot of practical challenges like this. So I think hopefully we can expect some more provisos in this particular regard in the coming days once it starts getting implemented. Now I am sure, like recent NAFRA report, I am not sure how many of you have gone through that NAFRA report of Cafe Coffee Day. If you say, so in that Cafe Coffee Day, if you see, almost 1.25 crores fine was slapped by NAFRA, and it was on that one particular firm. They were fined 1 crore and 25 lakhs for 4 auditors, 5 lakhs each penalty. So 5 lakhs penalty, at least I can understand, fine, you can pay off. 10 years ban on their practice. So 10 years ban on their practice is as good as not practicing after that. 10 years ban on their practice, and the firm gets a 1 crore penalty, and the 4 auditors and 1 firm. I think a lady who's also, 1 or 2 ladies are also there in that. So why I have put this slide is, this is more important actually. Even a small feature like an audit trail non-compliance, it may be only a paragraph of reporting for us auditors. But our audit report may be only 4 to 5 pages, but a NAFRA report comes to 300, 400 pages. On what report we have given. Taking on what report we have given, it may be like 2 to 3 page report, they will be coming up with an 800-page report for NAFRA. So even a small feature like audit trail can also lead to non-compliance. So I think it's high time we educate our clients. Even if they are not aware, it's time that we educate them on the importance of this particular feature. A small feature, though it has a lot of challenges, make them implement at the earliest. It's a little bit of additional responsibility on our part, but always consider this as an enabler for our, especially whenever we have to prove our innocence or that we are not guilty of any professional misconduct, then it is as good as that we have to sustain ourselves. So it is important that we tell our clients, make them aware give them webinars, seminars, presentations on how to go about this. As soon as possible, make them implement that. And yes, of course, it is an additional reporting responsibility, but anyway, we have to get along with it now or maybe the next year. So better, earlier the better. We will also get a practice on how to report on this. I think with this, just 33 slides is done here. So I am not sure like how much useful it was, but I tried to cover like end to end, starting from the definition part, what an audit trail is, what the Companies Act has come into picture with respect to the proviso on audit trail, how or what are the tools that currently has this feature, what will be captured in a particular audit trail, and what is the importance of those elements that is captured in an audit trail, and the demo. I took the example of Tally, how the versioning will be done, and the practical challenges on how the implementation has to be done. So I think huge thank you for each and every one of you for patiently listening to this. I am not sure how much value it has added, but thank you so much, especially for this opportunity to do this. I think the first time I did this was in Trivandrum branch, but that is a native branch to me, if you see, but a branch which never asked questions. I was very happy to take this topic. The first time I was very happy to take this topic because no questions will come. No questions will come. But to my